Dear students, now welcome to the section of Technology and Analytics. In section of Technology and Analytics, we are going to check the 4 chapters. So those out of those 4 chapters, now we will see the chapter number 1, that is topic number 1. Before going to the topic number 1, now we will see the section of overview. Management accountant primary role is the management accountant primary role is to provide the information to owners and managers so that they may make the best possible decisions for their organizations. So, being a certified management accountant, your primary role within an organization is to provide the best information. Their primary role is to provide the information. So, to whom the information is to be provided? That information is to be provided to the top management. So, those top level management, we now calling them as owners or managers. So, owners and or managers. So, why these CMAs are required to provide this information to the owners and managers? Because those owners and managers, they have to take the better decisions. Always they will take the decisions which are very much useful to the organizations. So that is the reason the primary role of the management accountant is to provide the information to owners and managers so that they may make the best possible decisions for their organizations. In this section of being a management accountant, what is your primary role in providing the information to these owners and managers? In all the aspects we will cover. So, when you see this slide, here a well designed, so a properly designed, a well implemented, a properly designed, properly implemented and properly controlled information system is what important. So, here we are discussing about information system. So, we are now in a section of overview continuation. So, in this what we are going to see is a well designed, well implemented, properly controlled information system is the principal tool the accountants will use to capture, to process, to produce that relevant and reliable information. Why this relevant and reliable information is to be provided? Yes, this relevant and reliable information is always to be provided to the owners of the organization or managers of the organization. Why to these owners and managers we are going to provide this information? Because for their better decision making. In the previous slide, we have already seen that so management accountant's primary role is to provide the information to owners and managers. So why this information is to be provided to the owners and managers? So that is the question. So a well designed, well implemented, properly controlled information system, it is the principal tool what the accountants will use. So in order to capture, to process or to produce this needed, relevant and reliable information. So according to this need of relevant and reliable information to the top management. So this section of examines the role of technology and analytics in providing and using that particular information. So here, what is the role of technology that we are going to see in this section F? And what is the role of analytics in providing and using the particular information? In this entire section F, we are going to discuss always. So remember in your mind that management accountants they have to provide the information to the top management. So that information to be provided by the management accountants should be in alignment with the using of technology and analytics, so that the better information will get by these management accountants, and the same information now can be given to the top management by these accountants, and now the top management will take a better decision. So that is the reason in section F, this is the section F is newly added in the 2020 syllabus given by the IMA. So in this section F, so the main role is the technology and analytics part in providing the and using the information by the CMAs to the top management within the organization. So the section covers the in detailed manner is respected to all the coming 4 topics will be like this. So the section covers the role and use of this information system. So that is the reason this information system itself will be the one chapter. So that is topic number 1 will be the information system. And again, data governance, these concepts of how the data will be maintained and how it will be governed within an organization, including COSO model and COBE. So all these will be covered in topic number 2. And how the technology is used in transforming the financial data into the information. So this will be covered in topic number 3. So the section concludes by discussing data analytics topics, including the concept of business intelligence and data mining and analytic tools and visualization. All these will be covered in topic number 4. So like this, entire section F will be covered. So now going forward to the topic number 1, now we are going to see the information system. So then, what is the meaning of information system? Introduction to the information system. So now in introduction part, we will discuss a total 7 concepts. These are the learning concepts. So concept number 1, what is an accounting information system? So what is an accounting information system? Accounting information system is nothing but a formalized process. So what is accounting information system? If anybody asks you about what is accounting information system, then you have to tell them that it is a formalized process to collect, to store and process the accounting information. So that is the reason. So accounting information system is a formalized process to collect the accounting information, to store the accounting information and to process the accounting information. So this is called accounting information system. Here I will explain you some brief about what we are going to learn in this topic. So in detailed manner I will cover in further reading of this chapter. In concept number 2 of this chapter, this topic, we are going to see the business cycles. Then what is the business cycle? Business cycle means a way of organizing financial transactions according to its purpose. So what is the meaning of business cycle? If anybody asks you about what is business cycle, then your answer should be like this. Company is running so many transactions on daily basis. But how those transactions are classified? So that is the reason. A way of organizing these financial transactions, especially here transactions means financial transactions, according to their purpose. So according to their purpose means what? Their purpose means what? So according to their purpose means, so the purpose is the sale of our goods or services, sale of our goods or company product or rendering of our company service. Then the company will receive the cash. So that cash will be considered as nothing but because of sale or because of rendering of the service. So that cash whatever is received from the customer, so that will be considered as a revenue receipt. That is the reason here the purpose is the company selling the products or services. So that is the reason it will be classified as a revenue cycle. But when it comes to the expenditure cycle, mostly the expenditure cycle in a company will be consisting of a company generally in order to manufacture a particular product, they have to purchase the inventory, and also mostly the expenditure is relating to this inventory, and also expenditure relating to the temporarily company will hire the some temporary labor, and company they have to pay the consulting fee, etc. All these expenses are other expenses are there. So all these transactions will be covered under expenditure cycle. Again, in the same way, company will run an operation. So that is the production cycle. So in case of production cycle, there are total 4 activities will be carried out by the company. So what are all those 4 activities means? First of all, company activity number 1, that is activity A. Company has to design the product, and they have to, after designing the product, they have to plan and make a schedule, and once planned and scheduled, then production will starts, and once production is started and completed, then cost reports will be analyzed once again. So this is the operation cycle. So whatever be the expenditure or whatever be the activity covered, that should be classified. The financial transaction should be classified according to its the financial transaction should be classified according to its purpose. So that is the reason here the purpose is the operation cycle in this category. When it comes to the human resource and payroll cycle, here the purpose is the hiring of the employees, and sometimes firing of the employees, and whenever the hiring is made by our company, so then automatically our company HR will update the master payroll data, record the time data, and prepare the payroll, and dispose the whatever be the payroll, and dispose whatever be the payroll, along with that dispose the taxes and other deductions made from the employees. So this is the 4th business cycle. And in continuation with the learning concepts, in concept number 2, so there is a 5th one. So property, plant and equipment cycle. Here the company will acquire the assets by investing a substantial amount of investment. So substantial investment will be made. So because of making these substantial investments, before making these substantial investments, the company has to plan, make a budget, and according to its budget, according to its requirement, our company has to acquire the assets. So whatever be the financial transactions are there within an organization, those should be classified according to its purpose. That is the reason a way of organizing financial transaction according to its purpose is called the business cycle. Within the business cycle, there are total 7 type of cycles are there. One of them is the property, plant and equipment cycle. So in this, assets will be acquired, and once assets acquired, then they will be depreciated over a period of time. Depreciation will be according to the either straight line method or accelerating depreciation method, or the depreciation may be either declining balance or double declining balance method according to its depreciation method. So we are going to depreciate the assets cost and maintain the assets throughout its useful life. So whenever the life of the asset is completed, it will be disposed of. So that is the reason at the end of the life of the asset, it will be disposed of. So when you observe all these things, whatever be the financial transactions, I repeat, whatever be the financial transactions relating to the its purpose, that is purpose here is a property, plant and equipment, then it will be classified under this property, plant and equipment cycle. Now the 6th one is general ledger and reporting process. In this, so every company is maintaining its general ledger balance, and also so the same general ledger balance will get updated on daily basis, and after that post adjusting entries will be made, and finally the company will prepare the financial statements, So as you know that there are four financial statements. So nothing but income statement, balance sheet, statement of changes in shareholders equity, statement of cash flows. So all these four financial statements are there. So those will be prepared, and the same after preparing these four financial statements, so it will be producing the managerial reports. So these managerial reports will be helpful to the top management for their better decision making. Don't forget this. Always remember this. For better decision making process, always the management need better information. That better information is always to be provided by these management accountants. In concept number 3, we are going to see how the separate financial and non-financial system is existing before implementation of the ERP system. So as you know, enterprise resource planning, this is the latest updation, and before this ERP package, ERP software, so in olden days there is a maintenance of the records separately by the company with respect to its financial information or with respect to its non-financial information in a separate file. So because of maintaining the separate information, the company is facing so many problems. That is the reason. So in concept number 3, you are going to see so what are all the challenges? The company is generally facing because of maintaining the separate financial and non-financial data. So after implementation of the ERP system, how this was eliminated, separate financial non-financial system, how it was eliminated, and how this ERP system was implemented. So what is the difference between maintaining separate financial non-financial systems, separate records for the financial information, and a separate record for the non-financial system, and implementing the ERP system. In ERP, automatic updation will be there. So entire company information will be maintained in one database. That is the reason whenever a particular master data is updated, automatically it get updated even in other files also. So that is the reason even in case of ERP system, financial and non-financial system will not be maintained separately. That will be maintained within the same database only. So concept number 4, we are going to see the enterprise resource planning. So then what is enterprise resource planning? In ERP, so ERP systems are divided into the typical business cycles as follows. That is order to cash, revenue cycle. So purchase to pay, expenditure cycle. Production cycle. Human resources and payroll cycle. So financial, that is the general ledger cycle. So project management equal to general ledger cycle. So customer relationship management CRM. So systems tools, so everything will be integrated. So this is the speciality of the integrated. This is the speciality of the ERP system. So in ERP, everything will be integrated. So that we are going to see in this topic number 1. So in concept number 5, database management system, DBMS. So what is the meaning of database management system? So here DBMS is nothing but an interface or program between the database and the application program. So what is the meaning of database management system? So it is nothing but an interface. Database management is nothing but an interface, or it is either an interface or a program between what? It is an either interface or program between the data and application program. Between the data and application program. You can assume that a database also. Between database and application program. Application program means the application program which is designed to access the same database. So this DBMS controls two primary components. one is the data and that database program. So that is the reason. So either it will be considered as a database or data and the application program. So it is an interface between the data and the database program. In this topic, there is another concept is called concept number 6. In concept number 6, so what is this? What is a data warehouse? So data warehouse means what? Data warehouse is a set of large databases consisting of detailed and summarized data. So whenever I call it as a data warehouse, you can simply assume that it is a set of large database which is maintained by the company, not simply for the routine transactions but for the purpose of analysis by the company. You can assume this large database, this data warehouse has even a storage location also. So this is the meaning of a data warehouse. So we'll see the detailed content of this data warehouse in this topic. We are going to cover the concept number 7, enterprise performance management also. So then what is the difference between ERP and EPM? So remember that in a ERP, so we are going to discuss at operational level on daily basis. But when it comes to the EPM, it is a entity-wise concept. Entity-wide. Entity-wide means company as a whole. So that is the reason it consists of monitoring and evaluating the business performance. So it consists of monitoring and evaluating the business performance. So these are the 7 concepts we are going to see in this topic number 1. So topic number 1, introduction. Okay. So introduction to topic 1, information systems. So as I already told you in the beginning of this topic, in order to provide relevant and reliable information to decision makers, so then what is required? In order to provide relevant and reliable information to the decision makers, what is to be provided? A business requires a method to capture and process the data and then report the information. So this method, I repeat, this method is called what? Information system. So why this method is to be implemented? In order to provide the relevant and reliable information to the top management. So this chapter reviews the primary elements of a functional information system. So these are the whatever with the 7 concepts we covered in this 7 concepts we covered in this topic 1 is the topic 1. These are the whatever with the some topics covered in this topic. So these are nothing but will be seen from the management point of view. So now what is concept number 1? What is an accounting information system? So as I already told you, accounting information system is a formalized process to collect, to store and process the accounting information. So what is the purpose of AIS? To provide the relevant and reliable information to decision makers, right? And in continuation with the AIS, so AIS will achieve this by creating. So AIS does this by creating, recording, reporting and summarizing a company's financial transactions. So that is the reason company financial transactions are important in creating, recording, reporting and summarizing the accounting information system. So primary models of an accounting information system is take an input and it will be processed and you will get the output, and based on that output now you can prepare the summary report to the top management. So in continuation with AS, So when you observe this image, date, account and description, debit, credit. When you receive the payment from a customer, so you will receive the cash, and from the customer means what? So cash to accounts receivable. So this is the journal entry. When you pay for a transaction value, so then advertisement expenditure to cash. So this is the dollar value. Okay. So why this has been given, transactions are always either created or those transactions always can be given as an input into the AS. They are recorded or processed, then they are reported or given as a output. So just simple, transactions are either created or they will be given as an input into the AS. So you have to think that there is an input, and after input there will be a process, and after process you will get the output, and after output, based on this output you will prepare the summarized information. So this summarized information is now to be given to the top management from this AIS. The data within the AIS can then be summarized. So this is what we are dealing with. The data within the AIS can then be summarized in a manner that is most useful to the decision makers. Take for example, in case of daily sales report, so 16th October 2020. So here today's date is 17th October 2020. Assume that today's date is 17th October 2020. So report date is nothing but current date minus 1. So 17th minus 1. So that is you will get to the 16th. Why am I explaining in case of accounting information system, there may be either simple process, there may be a simple process, or there may be complex process. So that I will explain you. Summarized information may be either simple as a daily sales report or as complex as the company's financial statements provided to the SEC on Form 10K, Securities and Exchange Commission. So in case of financial statements which are to be prepared and to be compulsory provided by the publicly listed companies to the Securities and Exchange Commission should be on Form number 10K. So this is the complex one, but this is the daily sales report is the simple one. Why I am explaining you all this? Accounting information system may be either simple or complex. That reporting mechanism may be either simple or complex. We have to understand all this. Why accounting information system is needed? In this topic 1, we are discussing about the information system. In order to provide better information to the top management by the CMAs, so then that information should be an authenticated one. Information will be derived from the data. So that's the reason data should be authenticated source, and data should be very reliable, and it should be very timeliness. So you have to remember all these things. That is the reason key elements of the accounting information system is the quality of the data, reliability of the data, and timeliness of the information. So in order to provide better information to the top management, you have to remember that the key elements in an accounting information system is so how the data quality will be, and how the reliability of the data, and how the timeliness of the information. So you have to keep these three elements in the AIS system. So whenever these three elements are presented in the AIS system, automatically the management accountant, being a management accountant, you can get the good information, and you can provide this good information to the top management for their better decision making. In case of concept number 2, as I already told you that, so concept number 2 is nothing but a business cycles. What is the meaning of business cycle? Business cycle means nothing but classification of the financial transactions, the way of presenting the financial transactions in accordance with its nature. So that is the reason total business cycles are divided into 7 categories. A properly designed AIS will create, record, report and summarize. So it will create, so properly, if the properly created AIS is there, then automatically it will give us, it will create or it will record or it will report and even summarize all financial data or financial transactions according to its relevant cycle. That is the reason a cycle is simply a way of organizing financial transactions according to its purpose. So that is the reason there are 7 primary cycles. So the first one is revenue cycle. So the first one is a revenue cycle. So here in revenue cycle, as I already told you that company is devoting its most of the time for the purpose of sale. So what are the financial transactions relating to the sale of the goods or renting of the service by an organization? So that entire transaction will be classified under revenue cycle. Another one is expenditure cycle. Mostly the expenditure cycle is relating to the either purchase of the inventory by the company to manufacture a product, or sometimes the company may incur some other expenditures also. So other expenditures may be in the form of hiring the temporary labor or payment for the consulting services rendered by the other consultants, etc. So there is a production cycle, as I already told you. So human resources and payroll cycle, financing, fixed assets, property, plant and equipment, general ledger. So these are the 7 primary categories. So now business cycles, we will see each and every one. Every company divides its transactions across these cycles, but every company need not use every cycle. For example, manufacturing companies may have all the cycles, but service company may not have the production cycle. So that's the reason. For example, a manufacturing company would likely to employ all of the cycles, but an advertising agency would not likely use the production cycle, because for an advertisement company there is no production process. Since that cycle is used to track the cost of manufacturing a product, but not cost of rendering a particular service. Okay, although most transactions are now typically done either entirely online, a manual system is presented below. So presented below means in the next slide. Okay, so this slide and this slide. So this is the manual process I mentioned here, but actually that manual process is not required as of now, because entire that manual process is now carried on by the systems only. So all the most for your better understanding only I produced this manual process. So all the most transactions are now typically done entirely online. A manual system is presented below so that the reader may more easily analyze in the process. So here reader means so you are the being a student, you have to know all this manual process. So in case of business cycles continuation, now we will see the revenue cycle, how the revenue cycle works out in an organization. In case of revenue cycle, so receive a customer purchase order by the company. So now here in this step number 1, the company will receive the order from the customer. Order from the customer. So now the company receives the order from the customer. Now if the customer pays cash for this order, then no need to discuss all these things. But if the customer is buying all the goods from our organization on account, then we have to check his credit eligibility. That's the reason in step number 2, check the customer credit. If the customer credit is approved by our company, approved by our credit manager, then check for the inventory availability. So customer placed the order na. So now we have checked the customer order, and he is very much eligible for the credit. Now we have to check the inventory availability. So once the inventory is available, then prepare the sales order. So you have to prepare the sales order, then prepare the inventory picking ticket. So then pick the inventory items whatever is ordered by the customer. Then prepare the shipping documents. Shipping documents are nothing but a packing slip, bill of lading. All these are the shipping documents. So now the seventh step is pack and ship the order to the customer. Now send whatever with the invoice to the customer and record the sale and accounts receivable. Record the sale and accounts receivable because we are selling on a account, not for cash. So that's the reason the accounts receivable account should be updated. Now in ninth step, receive the customer payment after when the credit period is over. So we will receive the cash receipt. So now record this cash receipt and accounts receivable as a 10th step. So this is called revenue cycle. This is the very easiest process. Everybody knows about all this process within a manufacturing company. So when it comes to the second cycle, expenditure cycle. In case of expenditure cycle, so mostly the company will incur the expenditure in the form of purchasing the inventory, or sometimes paying the some amount for the purpose of using any services by our organization for the manufacturing of the product. So that's the reason. Assume that inventory control creates a purchase requisition. Here in step number 1, so inventory control department will create a purchase requisition. So this is called PR. So first of all, inventory control department, this department will raise the purchase requisition. Based on this purchase requisition, now in step number 2, purchasing creates, that is purchasing department. Purchasing here means purchasing department. So purchasing department creates the purchase order. So here this is purchase requisition means nothing but in purchase requisition here means nothing but intent raised by the inventory control department. In step number 2, so this purchasing department will raise the purchase order from the purchase requisition based on the purchase requisition and sends the same to the vendor. Now in third step, vendor ships the whatever items ordered by our company. So those ordered items are now ships by the vendor to our company. So now we are going to receive those inventory items. Now the receiving department is there within our organization. So it counts, it inspects, it accepts the shipment and prepares the receiving report. So based on this receiving report, now the items are transferred to the inventory. So in the 5th step, inventory control records the receipt. So in 6th step, accounts payable receives a purchase order, receiving report and invoice from the vendor. Because this is the expenditure cycle, that's the reason we are always talking about accounts payable and also purchase order, receiving report and invoice from the vendor. Now being a 7th step, a purchase order, receiving report and vendor invoice constitutes a voucher package. So this is called voucher package. In voucher package, 3 items will be there. One is PO, purchase order, and receiving department report will be there, and vendor invoice will be there. So if you add up these 3 documents, it will be considered as a voucher package. Now accounts payable is updated, and cash disbursement prepares the payment for the invoice. So now payment is made. Check is now the check is signed by the authorized signer from our end within our organization, and sends that check to the vendor. So now accounts payable is get updated. So this is called expenditure cycle. So whatever be the financial transaction, according to its classification, according to its purpose, is classified according to its any one of these cycles. So here expenditure cycle covers the expenditure related transactions. So now you'll see the operation cycle. Then what is operation cycle? So the operation cycle varies by company or by product. So operation cycle is generally varies by company or by the product. Based on the type of company or based on the product it is manufacturing. So the operation cycle will vary according to its product also. However, there is a pattern of accounting data inputs, processes. Accounting data is to be taken as an input and it will be processed and it will be given as an output. So in this entire operation cycle, you have to always remember that there will be an input, there will be an input, and that input will be processed, and finally you will get the output. So accounting information is to be given as what? Is to be given as input, and that input is now will be processed. Accounting information will be given as an input. So pattern of accounting data. Okay, this accounting data will be given as input, and it will be processed, and it will be now the resultant will be output. So accounting information will be like this. That can be used when considering the production cycle. So whenever we are talking about this production cycle, so we always you have to always think about input, process, and output in each activity. So typically there are four major activities in the operation cycle. So product design, this is one activity. So that is the reason this is activity 1 and activity 2, activity 3, activity 4. In activity 1, product will be designed based on the cost reports and also other relevant data. In activity number 2, planning and scheduling. Once the product design is ready, so based on the customer orders, so the company will plan and will schedule for the production. And once planning and scheduling is completed, now company will run the production operations activity. And we will see each one separately. And in cost management, once production operations are carried out, so the cost information will be seen by the management. So how the cost was actually incurred, how it was originally budgeted, everything will be known by the organization within this cost management activity. So as shown in figure 1F3, so see below for each activity. So we will see this 1F3 for each activity. So each activity has either each activity has a input, process, and output. As I already told you, entire operations cycle is divided into either not either. So it is divided into input, process, and output. So now we will check one by one activity. In activity 1, we are going to see the product design. Product design. In product design, this is called an input. This is called process. This is called output. So here the input is nothing but what? Cost accounting reports. Because in order to design a product by any company, they have to consider the main criteria called cost information. So cost accounting reports is to be considered while designing the main product. And also apart from the cost, other relevant data. So generally what are the other relevant data is to be considered by the management in a cost in a product design means. So the other relevant data will be, so generally it will be relating to the in order to produce design a particular product, so they have to consider the other relevant data which is supporting for making a better design. So that other relevant data is also to be considered by the management. So once the company has taken this as an input, now the process is designing the product. Yes, now the product is designed, and ultimately the output is the bill of materials and operations list. Then what is bill of material? So bill of material is none other than ingredients of what raw materials, what services are, and other etc. items to be included in designing the product. But whenever it comes to the operations list, here operations list will give us the nothing but product recipe. You can assume like this: product recipe. Operations list, that is what are all the various operations need to be carried out in order to manufacture this product. You can assume this bill of materials will be treated as nothing but ingredients, and operations list will be considered as a product recipe, so that you will get a better idea. So in activity number 2 there is a planning and scheduling. So what is the plan and what is the scheduling? So here planning and scheduling, everything will be based on the customer orders. If we receive the customer orders more and more, automatically we have to manufacture more and more. So based on customer orders, we can implement either MRP or JIT type of production methods. So manufacturing resource planning, MRP is the one type of method. Just in time manufacturing is the another type of manufacturing the product. So in MRP system, first of all you will manufacture and store and maintain the availability of the product. But in just in time, whenever we receive the customer order, then only we will produce the product. So depends on customer orders, we will manufacture the product either by following the MRP system or by following the JIT. In JIT system, just in time, the name itself is sounding that in JIT system, in JIT manufacturing, whenever we receive the customer order, then only we are manufacturing the product. So based on either one of these two manufacturing methods, our planning and scheduling should be there. So once this is called as an input. Again, in each activity there must be an input, and this is called nothing but process, and this is called output. Here the output is master production schedule is the output. So that is based on any one of these production methods. So the output will be master production schedule, and also production orders, and also material requisitions, move tickets. Material requisitions means if we are following a just in time purchase production method, then now we received 100 items order from our customer. In order to produce these 100 items, we need raw material, labor, other overheads and etc. also. So material requisition here means whatever be the raw material required to produce these 100 items, that we need to procure. So according to this activity number 2, planning and scheduling, so this is the output we are getting. Based on this output, now we are moving to the third activity, that is production operations will start based on the planning and scheduling. Whatever be the output to the activity level 2, the same will be the input to the production operations. So the same will be the production operations. Master production schedule, production orders, material requisitions, move tickets. This is an input. Based on this, now accounts for product cost and inventory levels. So that is cost will be decided here. Cost will be decided here. So this is called nothing but a process. So this is the output. Based on the cost, this is output. So you will get the production operations report. So what is the production? How much is the production carried on? Like that report. Master production schedule, production orders, material requisitions, move tickets, and job time tickets. So now we are moving to the activity number 4, cost accounting. So here whatever be the output for the activity 3, that will be an input. The same will be an input to the next activity. So here production operations report, master production schedule, production orders, material requisitions, move tickets, job time tickets. So all these are nothing but input to the activity number 4. So this is the input, process and output. Don't forget these 3 level of activities. So process is nothing but either by following job order costing or process costing. As you know already in the previous sections, so there are either job order costing or process costing. So job order costing means nothing but job wise costing. Process costing means process wise costing, that is process 1 to process 2, process 2 to process 3, process 3 to process 4, like that. So but when it comes to the job order costing, so it will be based on the customer order. One customer may order 10,000 units, another customer will order 20,000 units, like that. So this is the process we need to account for in cost accounting in activity number 4. Output will be the, so total cost will be decided, cost of goods manufactured and other reports used in financial reporting and management decision making. So these are the 4 activities will be covered in a production cycle. Now come to the 4th cycle, human resource and payroll. What is human resource and payroll cycle? In human resources and payroll, you have to consider all the skills needed to the employees in order to perform their jobs. So the primary role of the human resource cycle is to make sure the business has the people with the right skills. The people with right skills will perform the right things in place to carry out its mission. So the primary steps in this process are nothing but hiring, training, transferring and firing of, even sometimes firing the employees. So in addition, the human resource process is the focal point for providing employee benefits, maintaining good morale and supporting a safe, clean and productive work environment. So the primary function of the payroll process is to compensate the whatever the work they have done. So to compensate employees for the work they have performed and to take care of the taxes related to payroll. So that is the reason there are five main steps in the payroll process. One is update the master payroll data. After that, record the time data. Now prepare the payroll and disburse the whatever be the payroll, and whatever taxes are deducted from the employee disbursements, now disburse those taxes and other deductions to the respective authorities. So this is the payroll process. I am reproducing in the form of chart. So figure 1F for payroll process is update the master data, record the time data, prepare the payroll, disburse the payroll, disburse the taxes and other deductions. So now the fifth cycle is property, plant and equipment cycle. As I already told you, in property, plant and equipment, acquisition of the assets, depreciation and maintaining of the assets, and disposal of the assets. These are the main three things. So the property, plant and equipment cycle consists of these three primary steps: acquire the assets, depreciation and maintain the assets, dispose of those assets. So property, plant and equipment generally represent the substantial investment by our company and are expected to last for multiple years. So whatever investments made by our company on the plant, property or equipment, so it is assumed that it will be long lasting for multiple years. So as such, the acquisition or purchase of these assets requires the careful planning and analysis, because it's a substantial investment which is a irrevocable decision, not revocable decision. So after the assets are acquired, they are maintained and depreciated. Their use is then estimated by one of several appropriate methods of depreciation. So except the property as it is not a depreciable asset. So here property means except the property means land. You can assume land cannot be depreciated. So for other assets it will be depreciated na? So that's the reason, such as either you have to apply straight line method or double declining balance method and units of production method. So this is also one of the depreciation method. For financial and managerial accounting reporting needs. So in case of financial reporting also, in case of managerial accounting reporting also, you need to depreciate always those assets. So depreciation is mandatory. So next, after the fixed assets served its purpose, so it is disposed of by selling or scrapping. So any difference between its net book value and its market value, so is now recorded either as a gain or loss, which is appropriate. So net book value means, say for example, net book value. So on the face of the balance sheet, so assume that this is the balance sheet. So on the face of balance sheet, the asset recorded is already recorded is the net book value is assume that $100, but when it comes to the market value of this asset, now you are selling at only $80. So the carrying value of net book value is $100, but market value is only $80. The difference of $20 is nothing but a loss. If you are selling this net book value, which is $100 value, if you are selling the same at $120, then $20 would be the gain. So in our example, it is the loss of $20. So this is the property, plant and equipment cycle. In this cycle, as you already aware that, so assets are acquired and depreciated and maintained those assets, and finally whenever their life is terminated, it will be disposed of. So what will be the transactions relating to these activities? All those financial transactions will be classified under property and property, plant and equipment cycle. So this is the diagram. So you know already this one. So acquire the asset, maintain and depreciate and dispose. Just for simplification I have given like this also. So sixth one is the general ledger and reporting process. As I already told you, in case of general ledger and reporting process, so there are nothing but four primary steps involved. One is updating the general ledger, post the adjusting entries, and prepare the financial statements and produce the managerial reports. So update general ledger. So same thing, post adjusting entries, prepare financial statements, prepare and produce the managerial reports from financial and non-financial data. So till now we have discussed two concepts. So concept number is nothing but covering 7 business cycles. So that is the reason it has taken so much of time to discuss. No problem. Concept number 1. In concept number 1 we have discussed the accounting information system. In concept number 2 we have discussed those 7 cycles. Now we are in concept number 3. Concept number 3 is discussing about separate financial and non-financial systems. As I already given you the brief learning concept at the introduction stage. So in introduction I have given you that whenever a company is maintaining its information separately in financial data, separately in non-financial data, so then it will be a challenging task to the company to maintain that data, because sometimes they have to reconcile this financial information with the non-financial information. So before introduction of the ERP systems, companies are generally tend to maintain separate financial database systems and non-financial systems. But with the introduction of ERP systems that we are going to see in concept number 4, so this concept number 3 is no more relevant for the companies. So whatever be the separate financial non-financial systems we are going to see here is just for the sake of discussion. So in practical cases now everything is online, and especially top level companies are now maintaining their records, their entire information system through online process. So that is they already majority of the companies are implemented the ERP system. But anyhow we have in our syllabus about this concept, we are now discussing this one also. So see figure 1 of 7, pre-ERP processing. So before, that is before implementing, I already told you that before implementing the ERP process. So this is a pre-ERP processing. Okay. So sales invoice, this is the financial transaction. So in this record the sale. So this is called sales file. But data about sale, that is time of day, weather, previous contacts, etc. All this information will be recorded. So this record data about sale, which is the non-financial sale data. So this is the financial data, this is the financial data, but this is the non-financial data. So that is the difference. Now we will see the concept number 4. So enterprise resource planning. Then what is ERP? What is ERP? So remember that in ERP, every information will get automatically updated. Before ERP, just now we have seen in concept number 3 that whatever be the financial transaction is there, that will be separately maintained as a financial information. Whatever be the non-financial information relating to the same financial transaction, that will be separately maintained. But no need to maintain separately like that in case of ERP. Because the reason is in ERP, whatever information given as an input within an ERP system, automatically it get updated wherever it is required to be updated. So that is the reason before the days of relational databases. Relational databases means what? So whatever be the database in which we are going to establish a relation between the data is called relational databases. So before the days of relational databases, now we are in a relational databases. So, but he is saying before the days of relational databases and inexpensive computer memory. So, whenever there is an inexpensive computer memory, so companies had no alternative but to create separate programs. So, companies will not find any alternative procedures. Simply they have to maintain the separate programs and files to manipulate and maintain the data. For example, I will tell you, companies would create a program and data file for daily sales and a second program and data file for accounts receivable. So here, this is nothing but a sales, this is nothing but a accounts receivables. So automatically this will not be updated. So before introduction of the ERP. So the two files had to be reconciled on a regular basis to assure data accuracy. Would it not be better to store all company data in one database? This is the question. So the resultant answer here is yes, we can store all the information in one database because of the introduction of the ERP. So the invention of the relational databases and the falling cost of computer memory facilitated the introduction of ERP. So ERP systems store all company data in one central database. So this is the common point. This is the main point. So in addition, the ERP stores not only financial information but also non-financial data related to all aspects of the company, from employee health plans to equipment maintenance records to customer phone numbers to capital expenditure budgets to marketing campaigns and everything in between. That is the reason ERP has been divided into the following classifications. So ERP systems are divided into the typical business cycles as follows. So nothing but order to cash, which is similar to the revenue cycle. Purchase to pay, similar to the expenditure cycle. Production cycle, I already discussed in the business cycles. Human resources and payroll cycle, financial cycle, project management cycle. So CRM, customer relationship management cycle, system tools. So entire ERP system will integrate all these systems. So whatever I discussed separately in the previous slides about all these business cycles, now all of them are integrated within one database because of implementation of the ERP. So that is the reason. What is the order to cash? So this is nothing but revenue cycle. This processes the order entry and shipping the order and inventory availability checking and cash received from the customer and commissions, whatever it is, we need to pay to the our commission agents because of procuring the orders. So purchase to pay, that is expenditure cycle, processes purchasing goods received, inventory and warehouse management, non-inventory and cash disbursements. But when it comes to the production processes, so all this production scheduling, bill of materials, material requirements planning, engineering, work in process, quality control, cost management and operations for the service companies, all these things. So human resources will account for and payroll maintains and processes human resources. So payroll processing, benefits to the payroll, time records maintenance, training and education to the employees and government reports. So taxes paid to the IRS, etc. So financial ledger will maintain the and process the general ledger, accounts receivable, fixed assets, all these are the ledgers, cash management, accounts payable, budgeting, financial statements and other reports also. But when it comes to the project management, it covers the project management records and maintains billing system, costing system, time, performance, expenses, and activity management. So project management will include all these things. All these will be integrated. So whenever I am discussing all these things, you have to assume in your mind that so all will be integrated. All will be integrated. So that is the reason this is nothing but ERP, automatically updated. So ERP continuation. So customer relationship management maintains and supports sales, marketing, services, contact with customers, commissions, and call center support. So in addition to this, companies seek to anticipate customer needs through the analysis of big data and the Internet of things to the extent possible. So all these will come under customer relationship management. So system tools are provided to establish and maintain master file data, flow of data, so access controls and others. This is called technology related system tools. So I can explain you all the above information simply in this chart. So order to cash, this is called revenue cycle. Purchase to pay, this is called expenditure cycle. So production cycle, okay, and financial matters related, that is general ledger and reporting. So system tools, customer relationship, CRM management, CRM, project management, seventh one, human resources and payroll, eighth one. So all this will be covered like this. So this is the integration. So ERP database, whenever you update any information in order to cash, it will automatically updated in a financial ledger. So once in order to cash, in this, once you receive the cash from the customer, it will be get updated in the sales ledger also. Like this, like that, automatically the master data will get updated. So now we will discuss about the concept number 5, database management system. So then, what is database management system? As shown in figure 1F9, first of all I will show you the 1F9. So this is called database, okay. So in this database, we are organizing the sales application, cash receipts application, billing application, shipping application, inventory control application. So all these systems are implemented here. So all these systems of database management system. So this is the flow chart. So I will explain you the concept of database management system, how it works out. So database management system, as shown in figure 1F9, a database management system DBMS it is nothing but interface or program between what? Between the database and the application programs that access the database. Here application programs. So nothing but these are the application programs. So sales application program, cash receipt application program, billing application program, shipping application program, inventory control application program. So nothing but this is an interface. So this is an interface between application programs and database. So the DBMS manages and controls the data and interface between the database and the application programs. So the DBMS facilitates creating, retrieving, updating, managing the data and protecting the data. So the DBMS controls two primary components. So the one is the data, the database program. So the database program that allows data to be accessed, retrieved, modified and locked if at all necessary. So the database schema or blueprint which defines the database logical structure or the way humans view the data. So the DBMS provides a centralized view of the data that can be accessed by many different users from many different locations. Not every employee has given, assume that not every employee has given to have an access in this database management system. In case of marketing people, they have given only for the sales related data. They have given an access only for the sales related. In case of production department, they have given only for the access for the inventory control application. Like that. So controls will be there. That is the reason the system can also limit. So that is called control. Which data a particular user or set of users can access, can retrieve, can modify. So the DBMS schema allows users to access the database without knowing where the data is actually physically located. So where is the location of the data that may not be known by the all the persons, because it is a centralized database management system. That is the reason. So now what is concept number 6, that is what is data warehouse. As I already told you, data warehouse is nothing but it consists of the large amounts of data. It is nothing but a storage location and it cannot be used for simple processing but for the purpose of analysis in a detailed manner. So top level management will use this information for the deeper analysis. So that is the reason a data warehouse is a set of large databases consisting of detailed and summarized data that is used primarily for analysis rather than for the processing of the simply processing of the transactions. It is essentially a repository. Also, we can call it as a storage location for all of a company's data retrieved from various programs, sources, and databases. So the data is typically cleaned and organized so it can be searched. So here the main element is the data is typically, that is generally cleaned and organized so it can be searched easily. So customer relationship management, ERP, billing system, supply chain, all will be like this. It will be located in this data warehouse. From this data warehouse, now it can be used for the purpose of reporting or visualization or for the business intelligence. Okay. ETL, extract, transfer, locate. So that is the meaning. So extract, transfer, locate, and again use it. So this is called data warehouse. So the concept number 7, which is the last concept in topic number 1. So then what is the meaning of topic 1? Sorry, what is the name of the topic 1? Information system. In information system, we have seen concept 1, accounting information system, concept 2, 7 types of business cycles, and concept number 3, we have seen the concept number 3 also, and concept number 4, 5, 6. So nothing but ERP related, separate financial and non-financial information system maintenance, and also data warehouse, DBMS management, everything. So now the last topic, the last concept in topic 1 is enterprise performance management. What is the difference between ERM and EPM? We have to think about this. ERM is relating to the daily basis transactions. EPM is relating to the entity wide. So enterprise performance management is relating to the entity wide. Here the main thing is entity wide means strategic level. Strategic level. Company is operating at a strategic level. Strategy drives the this concept EPM. Okay. So now we will see this entire EPM in a detailed manner. So what is EPM? EPM, it is a process. So EPM is a process that facilitates the linking of an organization's strategies. So strategy drives an EPM strategies to what? To specific plans and actions. So then what is EPM? Okay. So once again, what is the EPM means? An area of business intelligence which monitors continuously and manages an organization's. This is called manages. Okay. Manages an organization's performance according to its key performance indicators. So a framework for organizing, you can also consider it EPM as a framework for organizing, automating and analyzing the business methodologies and metrics, processes and systems to drive the overall performance of the organization. So it helps the organizations translate a unified set of objectives into the plans. So monitor execution and deliver critical insight to improve financial and operational performance. So financial performance will be improved, and also operational performance will be improved. So even we can see this CPM as there must be a strategy to the organization. So every company will have a strategy. Okay. So according to its strategy, they will plan, and the plan will be communicated within the organization. And once communicated, the personnel will implement that particular planning. So that is called execution. Once executed, it will be continuously monitored and feedback will be taken, and automatically it will be again whatever be the based on the feedback, whatever be the outcome, that will be automatically again linked with the strategy. So this is the flow of a diagram. So enterprise performance management will mainly looks like this. EPM evaluation is like this. So initially there is a basic accounting software applications in the year 1970s. But in the year 1980s, so there are some early spreadsheet solutions are available. So that is Lotus 123 and VCCAR to automate the budgeting process. And in the year 1990s, so there are email systems available, email and spreadsheet sharing, that is for collaboration and communication. And in the year 2000, so EPM software moves from Windows based to web browser based. So previously it was on Windows. Now in 2000, not now, in the year 2000, around that period, so Windows based to web based. And after that, EPM in the cloud becomes the new standard now today. So that is 2021. So EPM in the cloud becomes the new standard. So today cloud, so that is SaaS, software as an application. So that is the reason software as a service applications, SaaS means. So enterprise performance management consisting of monitoring and evaluating the business performance. So this is the meaning of EPM: monitoring, continuous monitoring and evaluating the business performance. Whereas ERP systems help management with the day-to-day operations of a company, but EPM is about managing the business through analysis, comprehension and reporting. So the main part of this EPM is the analysis, comprehension and reporting. So although EPM has been around for decades, EPM, even though it is there for decades, but its methodology has become more and more sophisticated as the tools and software for EPM have improved and evolved. Now, in the previous slide, we have discussed how it was evolved. So, in its earlier stages, EPM consisted simply of face-to-face meetings and phone calls. The first EPM software applications focused on collecting and providing just accounting and budgeting and financial performance capability. But the advent of the electronic spreadsheets eliminated the tedious process of creating manual spreadsheets. So facilitating more strategic planning, concentrating on a strategic plan, better budgeting, and improved reporting. Later, dedicated EPM software packages are available or developed that automated much of the financial consolidation and reporting duties of the finance and accounting departments. So later, Windows-based client server systems have given way to web-based programs. But now, today, as of now, in the year 2021, we are in this period. So software as a service applications have been widely adopted. So freeing employees to focus majorly on a higher level of strategic tasks rather than simply on managing the IT related concerns. So, what exactly we can know about EPM means we can see the ERM on daily basis activities on operational wise, but EPM is on entity wise. Okay, so EPM is always focusing on a strategic level. Okay, so we will cover the topic 2 in the next video. Thank you.